Credit Suisse was once one of the most prestigious banks in the world. But in 2023, it was on the verge of bankruptcy. What happened to this 167-year-old institution? The troubles began in 2021, when Credit Suisse was hit by two major scandals involving its clients, Greensill Capital and Archegos Capital. These scandals exposed serious flaws in the bank's risk management and governance, and resulted in billions of dollars of losses. The bank tried to recover from these setbacks, but it was too late. In 2022, it faced another blow when the U.S. Securities and Exchange Commission (SEC) questioned its financial statements and delayed its annual report. The bank also suffered from massive customer outflows, as clients lost trust in its ability to safeguard their assets. The situation worsened in 2023, when the entire banking sector was shaken by the collapse of Silicon Valley Bank, a major lender to technology companies. Credit Suisse had a large exposure to this bank, and its share price plummeted to a record low. The bank was running out of cash and options. It needed a lifeline urgently. That's when the Swiss authorities stepped in. The Swiss Federal Department of Finance, the Swiss National Bank, and the Swiss Financial Market Supervisory Authority FINMA intervened to broker an emergency rescue of Credit Suisse. They arranged a deal with UBS, the largest bank in Switzerland and a former rival of Credit Suisse. Under the deal, UBS agreed to buy Credit Suisse for a knockdown price of 3 billion Swiss francs in stock and agreed to assume up to 5 billion francs in losses. The deal also included a 9 billion franc guarantee from the Swiss government against potential losses on Credit Suisse assets. The deal was announced on March 19, 2023, and completed on June 12. It marked the end of Credit Suisse's independent existence and the creation of a Swiss banking titan with a balance sheet of $1.6 trillion and greater muscle in wealth management. The merger was hailed as a necessary step to prevent a broader banking crisis and to preserve Switzerland's reputation as a global financial center. But it also raised questions about the risks and challenges of integrating two highly overlapping companies, and about the future of competition and regulation in the Swiss banking sector. The deal that sealed UBS's dominance in Swiss banking was announced on October 15. UBS agreed to buy Credit Suisse for a low price of 3 billion Swiss francs in stock and assume up to 5 billion francs in losses. This was a bargain for UBS, as Credit Suisse had a market value of over 20 billion francs before the deal. But why did Credit Suisse agree to sell itself so cheaply? And what were the benefits and risks for UBS? Credit Suisse had been struggling for years with legal troubles, regulatory fines, and scandals. It had lost billions of francs in the collapse of Archegos Capital, a hedge fund that had borrowed heavily from the bank. It had also been sued by investors who had bought bonds from Greensill Capital, a supply chain finance firm that had gone bankrupt. Credit Suisse had been the main lender and distributor of Greensill's products. These losses had eroded Credit Suisse's capital base and reputation, making it vulnerable to a takeover. UBS saw an opportunity to acquire its rival and create a banking powerhouse in Switzerland and beyond. UBS was already the largest wealth manager in the world, with over 3 trillion francs in assets under management. By buying Credit Suisse, it would add another 1.5 trillion francs to its portfolio, as well as gain access to Credit Suisse's investment banking and asset management businesses. UBS expected to generate annual cost savings of 2 billion francs by cutting jobs, branches, and overlapping operations. It also hoped to boost its revenues by cross-selling products and services to its enlarged customer base. However, the deal was not without challenges and risks. UBS had to convince regulators and shareholders that the merger would not create excessive concentration or systemic risk in the Swiss banking sector. UBS also had to deal with the potential legal liabilities and reputational damage that Credit Suisse had incurred. Moreover, UBS had to integrate two different cultures and systems, while retaining the talent and trust of its employees and clients. The merger of UBS and Credit Suisse was a historic moment in Swiss banking history. It marked the end of a long rivalry between the two giants and the beginning of a new era of dominance for UBS. It also reshaped the competitive landscape of global banking, as UBS became an even stronger force in wealth management, investment banking, and asset management,